Hello, and welcome to this July 2020 edition of Pork Talk. Yet another month has passed with British pig prices charting a remarkably steady course, despite all the changes that have gone on around them. So let's have a look at some of the recent developments in the market, as well as what might be coming up. Although there have been challenges, certainly in terms of slaughter, the coronavirus doesn't appear to have taken an unmanageable toll on the processing sector. Dealing with staff shortages has been an issue, but throughputs have broadly been maintained, albeit with a slight dip in May. Concerns remain about staffing levels in the future and as we start to make preparations for Christmas, and it may be in the boning halls rather than the kill lines themselves where difficulties arise. So we're not out of the woods yet, but in many ways it's been so far so good. The shortage of pigs widely reported in May fed through to lower slaughter in that month. About 800,000 clean pigs were killed, 12% fewer than in May 2019. However, production is still at least 2% up in the year to date. Retail demand has been above last year, and although the growth has declined recently, it's still about 20% higher for primary pork, and other products are still doing very well. We calculate that recently, retail demand has compensated for lost food service volumes. Pig prices in the EU have proven to be far less resilient during the coronavirus than our own. Each country is recovering from lockdown at its own pace, but by and large, demand remains lower than it otherwise would be. What is less clear is how quickly, or even if, people return to their old patterns of consumption. Economies are likely to have contracted everywhere in Q2, the UK certainly did, and the long-term effect of this on jobs and confidence is unknown. In the meantime, the SPP is around 19 pence above the European price. EU prices had been falling fast, but are now pausing for breath. British spot prices still appear to be strong, which indicates that despite weakness on the continent, prices here may hold up in the short term. Pigmeat exports, including offal, were up 3% year-on-year in April, bringing the year-to-date exports to 124,000 tonnes, 2% higher year-on-year. Value is up 21% in the year-to-date to £209 million. After falling last month, export prices to China went up again, and volume continued to climb. China now represents 45% of our export market, up from around 30% this time last year, and this shows the importance of that country to our pork sector. China's imports overall have been impressive, despite some action to control the domestic pork price. Volumes from across its trading partners have increased significantly in March and April. Our own pigmeat imports have been falling. Imports of fresh and frozen pork were down nearly a third in April, no doubt because of the closure of our food service sector. Including processed products, imports are down 16% or 50,000 tonnes in the year to April. The decline weighted towards March and April. But although things have been relatively stable for the UK pig market in the past few months, there is still the potential for things to change in the future. We are scheduled to leave the EU at the end of the year, and the battle with the coronavirus outbreak is not yet over. We'll be publishing our agri-market outlook at the end of the month, including our view of the prospects for the pork sector. But in the meantime, for the latest information on the pork market, remember to have a look at the pork section on the main website.